Hey everyone, welcome back to Beyond the 529. As most of you know, the cost of college has just continued to skyrocket over the last 10 to 15 years, increasing by an annual rate of anywhere from 5 to 6%. That's almost 2 times the national average for standard inflation. And with the costs going up at a much faster rate than a family's ability to increase their income, families have just become desperate to find creative ways to help cover that cost of college outside of the standard put money in a 529 or put money into a savings account and save it for when the time the cost of college comes. And one of the ways to do that that's been around for a long time is through the use of life insurance. And lately I've seen a ton of ads on Facebook with companies advertising the ability to pay for all of your college with life insurance and not have any student loans whatsoever when your student's all done. And what I want to do is I want to give you a little bit more information about that today and get into exactly what it means to pay for college using a life insurance policy and whether or not that's a good thing for your family. I'm Mike Bink, founder and president of Equivest Financial Advisors and Beyond the 529, the YouTube channel dedicated to helping you lower your cost of college. We specialize in late-stage college planning and can help you identify strategies that will lower your cost of college by thousands of dollars. To learn more about how you can become our client and get your plan started today, please click on the button in the description below. After you're done watching this video, please make sure to check out our website, equivestadvisors.com, where you can access our free masterclass to help you learn how to pay less for college, minimize your student loan debt without sacrificing your retirement. So what is whole life insurance? Simply put, whole life insurance is a permanent policy that you would take out, which is ultimately designed to cover the rest of your life. So when you pay a premium for your whole life policy, you've got a portion of it that goes towards a death benefit in case something ever happens to you. And then you've got some obviously that goes to cover the cost of that policy. But then the remainder goes into what's called a cash value account, which can actually build value over time. Now, whole life insurance can be a very safe way to save your money, but it can also come with very high fees. And oftentimes, if you're in a growth state, is not the most efficient way to set your dollars aside or invest them in order to get the maximum amount of growth, whether it's for retirement or whether it's for college. Some whole life policies are what's called variable policies, and they actually include something that's called sub-accounts, which will allow you to invest the dollars that you've saved ultimately in things like mutual funds or other types of investments with the goal of growing that money while it's in the insurance policy. Keeping in mind, however, that for those variable products, your money is still invested. So while there is some additional upside, there's also some potential downside in case the market were to turn downwards. So when your son or daughter goes off to school and you start getting the bills, the way you can use one of these insurance policies to pay for college is to actually take a loan against your cash balance, which simply reduces the death benefit of that current policy. Now, if you were using one of these policies in order to pay for college anyway, and not for the death benefit primarily, then that reduction of the death benefit as you take money out to use for college doesn't really affect you too much. There are a couple primary benefits to using a life insurance policy when you pay for college. One of them is the flexibility in that if for some reason your student decides not to go to school, well, then you've still got that policy with whatever cash value in place. The second benefit of using a whole life insurance policy to pay for college is also where things can get a little bit sideways if you're not careful. Whereas if you're saving for college in a 529 plan, when it comes to calculating financial aid, a 529 is what's considered a parent asset. Whereas the life insurance policy, if you put your assets there, it's not taken into consideration for the financial aid formula, which at first glance seems like a great thing. And if you've already got a policy in place that you can tap into, that could be a very effective way to do it. But where things get really sideways is when you don't already have a policy and you ultimately are going to try to take one out for the purposes of shielding any assets from the financial aid process. This is a losing strategy from the beginning. And unfortunately, most of the so-called advisors that are out there that work in the college planning space, when it ultimately comes right down to it, what they're trying to do is they're selling insurance. And their whole strategy is to move assets out of your savings or somewhere that you can actually access them for college and put them into a whole life insurance policy as a way to quote unquote shield them from the financial aid process. The drawback to doing something like that is that if you didn't need that policy to begin with, or it wasn't already in place, well, then oftentimes the costs to actually get you into a life insurance policy that you could use, that policy is going to cost you sometimes as much as 2 to 3 times as much as you would have saved by not having those assets considered in financial aid to begin with. So again, the impact of having it considered for financial aid is about 5%. But on average, the normal whole life insurance policy is probably going to have fees that come along with it of usually 8 to 10%. So you can see net, that's not really a smart strategy for most families to take out. Now, of course, again, going back to who's recommending these, most of the time it's not fiduciary advisors that are taking a full comprehensive look at your situation, but rather they're insurance salesmen, and ultimately that's the only thing that they can offer in terms of trying to lower your cost of college and to get your family more financial aid. Another significant drawback to a life insurance policy is that normally it's going to take a significant amount of time for you to build up enough cash value to really be able to effectively use that to pay for college, unless you've got a ton of assets sitting there that you can just put into a policy to begin with. But there again, the cost piece that I mentioned earlier comes back to bite you. So in that case, all you're really doing is tying your money up in an insurance product. So like I said before, ultimately, unless you already have one of these policies in place to begin with that you've been contributing towards for many, many years and you can tap into, or you need a policy and it's appropriate from a life protection standpoint anyway for the life insurance, absolutely I would recommend you stay away from insurance policies as a way to effectively pay for college. It's going to cost you more than you're ever going to save to begin with, and at the end of the day, you're going to be worse off, and you're going to have tied up those assets that you desperately needed the flexibility with to pay for college in some insurance policy that oftentimes you can't touch for 5 to 10 years. If you'd like help taking a deeper dive in your situation and understanding exactly what the best strategies are for your family to use to get more financial aid and lower your cost of college so that you can protect your family's retirement, please make sure to click on the link in the description below or visit us at equivestadvisors.com, where you can take a free masterclass to learn some of the primary strategies that we use with families. And if you'd like more tips and videos like this one to help you plan for the cost of college and find ways to lower your cost as much as possible, please make sure to click subscribe in the section below and make sure to hit that notification bell so you get notified every time a new video is uploaded. Thank you and good luck going beyond the 529.